Moolala is brought to you by the nonprofit credit counseling agency Credit Canada. Preparing your taxes is stressful as it is, at least for me it is. But what if, you file that return and the CRA comes back at you with something and you don't agree with the take that they have on your particular circumstances? There is the option of filing a dispute, but I certainly wouldn't know where to start. So we're going to look at that process and how it unfolds, when to determine if it's worth your time and energy to pursue. Our guest is Amit Ummat. He is a tax lawyer, and he joins us from Burlington, Ontario today. Hello there.
Hi, Bruce. How are you?
What are some examples of maybe more common disputes that people have with the CRA over and above I don't want to, I don't like that number, like something that would actually count as a dispute?
Well, that's a really good question, Bruce. There's a lot of issues that people encounter, especially in the tax context. I think some of the more salient ones include the CRA assessing unreported income to a taxpayer, or one that is very prominent at the moment currently is our real estate assessments. Our real estate assessments relating to people selling homes too frequently, or building brand new homes and selling them too quickly.
We'll talk about those both specifically, but what is the very first thing that people should have in their mind before they even begin to consider whether they should pursue this? It seems like it could take time and money and patience.
Well, all of those. But Bruce, that's an interesting question, and it harkens back to a Latin maxim, si vis pacem para bellum, which loosely translated means, if you want peace, prepare for war. So my advice is always to prepare for a dispute prior to it occurring.
Wow, I love that phrase. It kind of makes me moderately terrified, which I think is a great phrase. So the two underreported income and real estate assessments. Let's start with the underreported income. So what would the CRA come back and say? You had income that you didn't report here. You need to add it on to your, to that particular line.
Yeah, so very generally, what will happen is someone will report very low income on their tax return generally, and the CRA will red flag that return and say, well, how is this individual living off of $15,000 of income per year? Then they'll look at your books and records, and basically a net worth audit will be conducted, which will mean that the CRA will determine what your assets are, they'll determine what your liabilities are, subtract your liabilities from your assets, determine your net worth, add in your personal expenditures, the amount that you spend on a yearly basis, and then tell you what your income actually is versus what you reported.
Wow. And then what? So once they tell you what your income is, then I assume they tax that at the marginal rate.
Precisely. They tax that, but not only that, they also penalize the taxpayer pursuant to the gross negligence penalties on the basis that, look, you knew that you earned much more income than you reported, so we're going to penalize you on the basis that you were grossly negligent. And those penalties can be 50% of the tax owing.
What would be the defense for the taxpayer who is reporting 15 grand a year, but lives in a beautiful home, takes international trips or whatever? And when a third party looks at that math the CRA does, they'd say, yeah, kind of makes sense. You're living a baller lifestyle here.
Yeah, no, well, it happens, right? I mean, I know of many circumstances where individuals report low income, but live a lavish lifestyle, and it's possible to do that. But generally what you do is you hire your professionals, you hire your CPA and your accountant and your lawyer to go through the books and records to determine where they went wrong. And the CRA itself and the tax court itself has called the net worth audit a blunt instrument. And so it is routinely incorrect. And it's incumbent upon the financial professionals of that taxpayer to determine where the mistakes have occurred.
Tell us about the process. So this is what you do. It begins with probably a panicked or infuriated call from a potential client.
Certainly. So it'll start with a brown letter indicating that, look, we've chosen you to for an audit. And so there's three stages of a dispute, and that's the first one is the audit. The second one is escalating it to the appeals division if you take issue with the audit's reassessment, and the third is tax court, which is the final destination. That's litigation. But yes, it will start with a letter indicating that the CRA intends to audit, and then what usually happens is I'm called at that point by the accountant, indicating that this is out of their wheelhouse and we need a professional to get involved at this point.
Every single case you touch, I am sure, has similarities, and every single case you touch, I'm sure, is completely different. What is the gestation of a dispute like this? How long does it last typically, knowing that there probably is no typically?
That's a really good question, and of course you're going to hate when I say this, but it depends, Bruce.
Yeah.
So if it's a smaller amount that's been reassessed, I mean, I have files, with between $1 and $500,000. You can usually wrap that audit up within a year. We've had files with over $25 million of unreported income, and those files are still moving their way through the process, and the audit can take 2 to 3 years alone. But if you want to talk generally speaking from start to finish, from audit to appeals to the tax court, it can take 5 to 7 years.
Wow.
Yes.
You really have to sign up for that. I mean, I'm sure there's a financial case to be made when the stakes are high, but boy, 5 to 7 years. I couldn't hold a grudge for that long if I tried.
The CRA certainly can.
They certainly can, I guess. Why don't work for the CRA? What is, again, and I know you're going to say it depends, but just can you give me a sense for the percentage of cases, ballpark, that would go from audit to tax court? If you're audited, is it 1% who might pursue it all the way to tax court, or is it 50%?
I think generally speaking, if we take audit being 100%, at least, I think maybe 30 to 40% could potentially be resolved at the appeals division, which is when you file the notice of objection. And then for the ones that are remaining, I'd say at least half make it to tax court. So if we're looking at the ones that begin at audit, probably 10 to 20% minimum make it to tax court.
Anytime I have hired a lawyer and they have done great work, but boy, is it expensive. Do you work on hours, or do you work on contingency? How should people think of the dollars associated with pursuing a dispute like this? And yeah, I know it depends.
But it depends particularly on the client and the client's preferences. So I will charge an hourly rate because it's easier to control. However, I will offer flat fees if the client would prefer that. But look, I'll be honest with you, Bruce. When you quote a flat fee number, the client usually doesn't like it and would prefer the hourly rate because generally they don't want to pay any more than they have to, which is something I fully understand.
Yeah. They also may be a deluded optimist like me and think, hi guys, it's only going to be resolved in like 2 weeks. This will be easy. And then you realize, as seasoned as you are, you're thinking, not the case. How would you advise people on the cost benefit thinking that they need to do? Obviously, there's a financial component. So there's your fees. There's probably other professionals who need to put time in, but also the psychological cost of what your word could be a war with the CRA that could unfold over the course of years.
So financially, it very rarely does not make sense to hire professionals to fight a tax dispute because of the amounts involved. And certainly people are usually upset in situations where they've been penalized. So that's never really been an issue because the amounts are rather large that the CRA is assessed in this particular office. Psychologically though, Bruce, this is where we come in, right? So we act as a shield for our clients. We take on the brunt of that. We ensure that clients are not affected psychologically by these matters to the extent possible.
We talked first about the underreported income. The second area you flagged was real estate assessments. Are they simpler to resolve? Can we go back to empirical data in an easier way?
Well, they're easier to resolve in the sense that ultimately you win the real estate cases by telling a compelling story. I mean, it all hinges on a carefully crafted narrative. And so that's much different than an unreported income case where let's go through the numbers.
What would be an example of a great narrative on real estate assessment?
You'd have to have a really good story. So I have clients that, let's see, I'll give you one. So I have this woman who has moved from, she moved from 3 or 4 houses. She started at one house, moved to another, moved to another, moved to another. All of them were brand new builds. So the houses were demolished, rebuilt. But she had very little to do with it. And her husband was the one that was behind it. And ultimately, she was basically taken for a ride. But the CRA says, look, you're on the hook for 50% of the HST on the sale of these homes on the basis that you're the title holder to these homes. And so we're challenging them, and the assessment's over $1 million. And so we're challenging that on the basis that, look, you have the wrong person. This is not the individual that should be liable for the HST. So that's one example of someone that quite clearly will be able to establish that they're not liable to the tax.
Is that couple still together?
No, they're not. No,
okay.
They're not.
I can see then it being really in her vested interest to fight that. There are some people who can afford a lawyer, who are, the stakes are sufficient that would make sense to hire a lawyer. There are other people who can't afford counsel and the stakes aren't as high. What other resources are there for those folks?
I think you should always, any individual who believes that they have a reasonably good chance of succeeding in tax court should still make the calls, because there are tax lawyers out there that will accept a file if it's reasonably winnable and for the right client. And that myself included. I mean, you shouldn't be precluded from having your day in court on the basis that you're maybe not able to afford a lawyer.
Very interesting stuff. Thank you very much for your perspective. I both learned something and also feel grateful that I have not been in these circumstances, because I think that would be not the funnest thing ever in the history of the world.
Well, thanks for having me on, Bruce.
Amit Ummat is a tax lawyer. He joined us from Burlington, Ontario, and he was here to talk a bit about the process that you're signing on for if you decide to dispute findings from the Canada Revenue Agency.